the Dukas Copy TV studio in Geneva, I'm Daniel Schwenger. For the technical analysis, I'm joined by Jean-Francois Owczarczak from Management Joint Trust with the product fingraphs.com. Jean-Francois, welcome to the studio.
Hi, Daniel.
Last week, correction down from the dollar is going probably to happen, and it has materialized, and also the correction up from euro dollar. So what does the situation look like today?
Okay, well, we're back on our fingraphs.com website. We have a mosaic here. We have a euro, cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months S&P futures and 3 months 30-year Treasury futures. We're looking at dailies here, so it's a perspective over the next few months. And you can see here the euro is still heading down, sterling is still heading down, Australian dollar is still heading down. We do see a bounce here, which we'll have a look at, especially on gold here, that we'll have a look at later on. And dollar Swiss, dollar yen still heading up, market is still heading up but getting exhausted, and the treasury bonds seem to want to move up again. So we're going to go on to euro US dollar. We're on an investor's view here. It's meant for investors which want to look at a perspective in quarters on the weekly, in months on the daily, and in weeks on the hourly. As we were here yesterday, we were saying that although we were still bullish on the dollar, so still negative on the euro, we thought we had reached a point where we could see a bounce or a correction up, and had anticipated that it could probably move towards 25.30, 25.70. Well, we were at that levels this morning. Let's see what we expect over the next few weeks. Now, first of all, let's revise the long-term picture. We still believe that the euro dollar is in a bear, that it's heading lower. It's slowly getting into oversold territory here with some stress on the envelopes, but we do believe there's more potential over the next few quarters. So although we could see a bit of a correction up, it's still a negative trend at the moment over the longer term. The daily, similarly, quite oversold at the moment, which would justify a bounce. We could see here that we have stress on our envelopes. Our risk index is well into the green. But also here, we do believe that there's more to come over the next few months with our I2 down targets, which are quite aggressive. These are all overextended targets, but could lead us down to below 122 to slightly below 119. So the correction up is really materializing on the shorter term end, on the hourly. And in the hourly, we're counting in weeks. And we saw this exaggeration last week and the correction up which has started. And it's only a correction up at the moment. It's only a first stage of a counter trend move. And we expect it to probably find some resistance between 125.36 and 126.30. So as long as we stay below this 126.30, we're still in what is just a correction in a downtrend. And at the moment, giving the very negative omen on the daily and on the weekly, that's pretty much where we could expect it over the next week or so.
So if we look to the gold, so there, especially this week, in news coming out about the Swiss Popular Initiative that is maybe going to succeed. So the first opinion polls show that actually the pro side is a little bit strong. This would mean that Switzerland, the Swiss national banks, had to restock the gold reserves and does need to have at least 20% of the value of Swiss francs in gold. So this has on the market, doesn't it?
It would have a big impact on the market, but to be fair, I would have expected much more anticipation in the prices. So although there's a lot of talk about it, I'm not quite sure that's really what's triggering the bounce at the moment. Probably just an oversold situation over the last few weeks. And in this respect, also, if I remember right, a week ago, the US numbers didn't come out as good as we had expected. So that's what really triggered the bounce. Do we really have a Swiss gold effect in there yet? We could have a bit of it, but I still think that if it was really in the prices, we would probably see much. If it was really of concern, we'd probably see a much stronger move. Now, let me just recap what we have here. So we have our weekly charts, which is heading lower. We still believe that well, we've reached the first, the higher boundary of our weekly targets around 1165, but we still believe that we can make it below 1,000 over the next few quarters. We're pretty much, very much oversold on the risk index. We have stress on the envelopes, but in essence, the downtrend doesn't seem quite finished yet. So in this respect, let's look at the daily. Well, the daily, we went into the targets. There's still time to go, but we do have here quite a lot of exaggeration with stress on our envelopes and an overbought situation. Just in a pure technical analysis, we could see here that we had a bottom here in early October. That will probably serve as a strong resistance while going up, so just below 1200. Very similarly to what we had here. You could see this bounce that we had during the month of October found a lot of resistance towards the bottom that we had back in June. So it's a correction up. We think there's probably going to be a lot of work around the 1200 level, and we could actually see this on the hourly, which has been heading up over the last week or so. It is in an uptrend, but it's only a correction up, and as you can see here, our corrective targets, the high end of our corrective targets is around 1200. So if we make it above it, then we could see a stronger move, but we think there's going to be quite a bit of work around there before we actually get there.
Okay, to the equities.
So on equities, we've seen a tremendous bounce over the last 3 weeks. We think it's getting slowly exhausted. If you look at the hourly here, not much has happened over the last 10 days. It hasn't gone down either, but we think the targets are pretty much reached. You had quite a lot of exaggeration here on the risk index, and so we believe the risk reward over the next few weeks is probably more to the downside. That said, it's been a very strong resilient move. You could see that here that it's held remarkably well, like if it was supported in a way. And so in this respect, we don't want to be too negative until we get some turning signs here. However, if you look at the daily, it's also quite exhausted in terms of price here. And you do have quite a lot of exaggeration here on our envelopes, which have really crossed above, meaning the short-term envelope has really crossed above the longer-term envelope, which points to a situation of stress, of market exaggeration. You could also see the risk index here, trying to make a top almost in the overbought and kind of a lower top than what we've seen back in September. So some kind of a divergence here, which I would be wary of. So although it's hard to confirm a negative moment yet, we are in zones of exaggeration and where the risk reward is probably more to the downside than to the upside. That said, we still have free bulls, potential continuous uptrend, and the weekly following a correction could still have the potential to move up into next year.
Mm-hmm. So thank you very much for this week. Jean-Francois Owczarczak from fingraphs.com. Thanks for the visit.
Thank you very much.
And thank you very much for watching. Do make sure to keep clicking back to the Dukascopy TV website for latest updates and exclusive. Great day and see you next time.